After a very disappointing first quarter of the year with home sales failing to climb over 2024's already anemic levels, signs are finally emerging that in March, we've turned the corner to have some growth. This week's pending home sales count came in just under 69,000 single family homes, which was 2.3% greater than the same week a year ago. So that's really the first week all year where home sales exceeded those of 2024. Home sales aren't strong, of course, but mortgage rates are now below where they were last year at this time. Rates have been generally sliding lower. And while last year at this time, rates were rushing to their highest point of the year. So, in fact, it is fractionally more affordable to buy a house right now than last year at this time. Home prices have not really appreciated any over the past year in most of the country. In many markets, home prices are lower than where they were a year ago. So I imagine some buyers are finding opportunity where they've felt thwarted for many years. So home sales are rising, but inventory of unsold homes is rising too. So, in fact, the supply side of the supply demand equation is moving faster. So, the weekly new listings count is finally getting back to closer to the old normal levels, the pre pandemic levels. Uh, and while the number of homes on the market is the most it has been in many years. So, as of now, the complete picture says to me that we should expect home sales to continue slight growth in the second quarter. But as supply grows too, the current pressures on home prices are down, not up, in most parts of the country. So let's take a look at the data and see all the specifics. I'm Mike Simonsen. I'm the founder of Altos Research here at HousingWire. So we track the entire US housing market every week. So you get the insights far before you see them in the traditional channels. Go to altosresearch.com if you want to get data for your local market today. So let's start this week with this week's pending home sales. There were nearly 69,000 new contracts started for single family homes this week. There are another 14,000 condo sales this week. So the week's pending home sales were up 4% from last week and came in 2.3% greater than the same week a year ago. So I think I mentioned this in the video last week that I expected this little threshold to be crossed this week, and sure enough, the market is moving exactly as I discussed. So in this chart, the purple line is 2025, the rate of weekly pending home sales. So it's climbing as you'd expect for March. It's not skyrocketing, but each week in the spring, there are more sales than the week prior. That's normal. What's also visible in the chart is the blue line from last year. And last year in the second quarter, and even more so in the third quarter, those were really lousy home sales months because mortgage rates were moving in the wrong direction. So if we're lucky this year and mortgage rates tick lower or continue to tick lower, then we should see each week in 2025 with home sales growth over 2024. So Easter is late this year, so that dip will happen later in April, and most of April will come in with home sales growth. However, by the time we get to the third quarter, there are new variables we haven't had to deal with in housing for many years. So, for example, if the economy continues to slow, we don't have yet visibility on if or when that puts the brakes on home purchases again, but it's something to keep our eyes on. So, for now, mostly positive signals in home sales. Two negative notes on the weekly pending home sales numbers, though. Condo sales are still running below last year. And this may be a signal about the economy, like better financed and better employed folks are generally lean towards single family houses. So you can see maybe economic slowdown in condo sales first. And also, Florida home sales are still down year over year. So the Florida market has much more challenge than, say, does Texas, for example. So keep watch of the weekly sales numbers here. As of right now, nationally, home sales are ticking higher and should come in showing continuous growth, slight growth over 2024 in the coming weeks. On the supply side, there are now 668,000 single family homes unsold on the market. So that's a substantial, nearly 2% climb for the week and is now 30% greater than last year at this time. So inventory is building faster than I expected at the start of the year. There are more sellers, and even though home sales are starting to pick up, the seller volume is moving a bit faster. So this was a gain of nearly 13,000 single family homes on the market for the week. That's a big week, 2% gain for the second week in a row. Inventory is growing faster than it was last year at this time. So, in general, for the year, we've expected that inventory will keep growing. That's not a surprise. But it grew pretty quickly last year. So I expected not as steep a slope in 2025. But so far, the slope actually looks to be steepening. So in this chart, each line is a year in this year's curve of available inventory at any given moment. So the purple line is for 2025, and it's marching higher. If you've been paying attention here, you'll know that our forecast model for 2025 has the year ending with just about as many homes unsold on the market as we ended 2019. So I've described that as finally an end to the crisis inventory shortage we've been in for 5 full years. So each week, where inventory growth exceeds expectations means the end of the year projections are inching upward too. So I've highlighted here 2024 and 2019 so that you can see where the year's full inventory curve should end up. The latest HousingWire inventory forecast model for the full year says that inventory will grow by 20% by the year end. That forecast has been adjusting higher for most weeks all spring. So, why is inventory rising when sales are rising? Well, we finally have some home sellers who are ready to move. Americans have been sitting on the sidelines with their ultra cheap mortgages for years now, delaying a move, delaying listing their house for sale. And that's finally starting to change. And we can track home seller sentiment changing in this weekly new listings data. There were 70,000 new single family listings unsold that hit the market this week. That's up 2.2% for the week and 15.5% more than last year at this time. There were 14,000 new listings immediate sold already in contract. So, in total, there were 9% more sellers than the same week a year ago. 9% more sellers and 2% more sales. So, sales are inching up and supply is coming faster. In our weekly new listings chart here, you can see the purple line is substantially above the blue line from 2024. It's climbing each week, 2.2% more new listings than a week ago. So it's totally normal for new listings to climb in the spring. Uh, the market is underway. But the real trend for 2025 is how the weekly volume of home sellers is finally approaching the gray lines at the top of the chart and separating from the gray lines at the bottom of the chart. The lines at the bottom are the last 5 years with the Americans holding on to their ultra low mortgage rates, the lock in effect. The gray lines at the top are the years 2015 through 2020, when we used to have 80, 90, 100,000 new listings in a given week. We're not quite there to those old normal levels, but we should be getting there uh, by the end of June. So, where are the sellers coming from? I suspect two channels of motivation for home sellers this spring. The first is that they've been sitting on the sidelines for 3 full years. It's time to finally move. The second is what I've called perhaps bad economy sellers. So these are folks that are perhaps sensing economic downturn and want to get out before it gets worse. It's probably very early in the cycle to be identifying these types of sellers. This is anecdotal and hypothetical. But we haven't had a notable economic downturn in this country in 15 years. So the prospect of unemployment or lower income is perhaps anecdotally starting to creep into home seller decision making. Now, I don't know whether like recession is coming. It could still be a long way off. But I think the key takeaway for potential home sellers this year is that if you're thinking along these lines, you should know that your competition is increasing this year. I don't see any signs for the market getting easier for sellers in 2025. So that is something to be aware of if you're making home selling decisions this year. And related to that message, home prices are barely positive versus last year at this time. The median price of the week's pending home sales came in just under $394,000. That is 1%, just 1% above last year at this time. So nationally, home prices are essentially unchanged versus last year. In fact, there are 5 states where home prices are actually below last year. That's Texas, Georgia, South Carolina, Washington, Montana. There are 4 or 5 more states, including Colorado, Florida, Arizona, which I will not be surprised to see negative annual home price change in the next few months. So there are 5 which are currently negative. So to be sure, there's still plenty of markets with very tight inventory and enough demand that home prices are rising. So New York, New Jersey, Connecticut, much of the Midwest. But overall, for the country, home prices are flat for the year, just barely positive. In the HousingWire Altos data, we track a bunch of home price measures. The median ask price, for example, for all the active market listings is only 20 basis points higher than last year. There are essentially no signals for any notable price appreciation in 2025. In this chart, we have the median price of the week's pending home sales. The purple line is climbing for the spring, but is just barely above last year. So, unless mortgage rates jump again, like back over 7%, I don't see a catalyst for home price declines like we had in that light green line from 22. But as supply continues to steadily grow, the price comparisons with last year become more difficult, especially in the fourth quarter of this year. There are plenty of scenarios, in fact, visible now where home prices nationally decline for the calendar year 2025. Finally, though, the leading indicators for future sales prices. The percent of homes on the market with price reductions ticked up this week again to 34.3%. So that's 40%, 40 basis points more than a week ago. It's not a fast change. The spring is not deteriorating like it was in 2022. So I've highlighted the price reductions curve from 22 here in green. And at the time, there was dramatic slowing in the housing market, and it led to actually rapid home price declines. Those were short lived as the economy still had a lot of cash to support buyers in 2023. This year is different. There are more price reductions now than at any time in many years. Price reductions are increasing, which indicates that even as home sales are improving, there's nothing in the data that says home prices will climb also. In fact, we could be looking at a year in 2025 when we say that home sales climb over last year, but home prices fall for the first time since 2010. We haven't seen dramatic changes in the price reductions curve lately. That's the signal can change fast when market conditions change fast. So, for example, when mortgage rates spike, we see a fast change in price reductions. But we've been moving more slowly. We've been in a more slowly moving market lately. And I expect these recent patterns of slightly improving sales and flat to maybe down home prices to continue as a result for the next few months. Okay, that's all the data we have time for today. If you need to communicate about this housing market with potential buyers and sellers, you should join us at Altos. You can now get a free account with your local data. Go to altosresearch.com and run a free report. Let's get started today.